Hello friends, this is Raj Sastri from Raj Option Trading. Today is February 2nd, 2022. Let's talk about top stocks with a heavy insider buying. So with that, let's jump in here. So we got Twitter with a lot of insider buying going on. And we got Asana. Asana founder and CEO has been buying like crazy. He's been buying a lot of Asana stocks of late. And then we got Insight, same story. We got a lot of insider buying. And we got a few more as you can see here. So with that, we'll jump in here and see what's going on with these stocks and what's worth buying here. So with that, let's get started. As you see here, we got a few great stocks. Top of the list is Twitter. Look, Twitter has $38. Stock is beaten down big time. Look at what's going on in 1 month and 3 month, 1 year it's down. But right now it's getting started. Look, it's up since last 10 days or so. I think it's turning around as you can see here. And it's got a lot of cash, $7 billion, $7.4 billion cash. And nice Altman Z score tells you it's not going to go out of business. Solid financials. Overall score is 60, which is very, very good. And then we got a few more here. Peloton, as you might be knowing, it's exploring the alternatives to see what the right thing to do here. I think it's they're in a little bit tough situation. Then we got a few more stocks here. We got Six Flags. It's a recovery play. As more and more folks get vaccinated, I can see this turning around. Look, it's got a nice profit grade here from Morningstar, and stock is also trying to bounce in the near term. So it's also a good one to slowly buy here. And then we got a few more as you can see here. One of my favorite is Insight, INCY. They have a lot of drugs in their pipeline. And look, they got $2 billion of cash in the balance sheet and solid financials and great growth as you can see here from Morningstar, and perfect 100 score, which is overall score, tells you they're doing very well. And we got Evergy here. If you like energy names and utilities, this is a good one to pick up here. It's got a nice 93 score overall. And it's also got a good financial grade, but Altman Z score is not great. It's a little bit lower. And we've got a few more as you see here. Stitch Fix has been bouncing off back and forth here. It's a good one to consider. It's trying to go higher as you see here. Stock has been clobbered off late. It's a very low price right now. And we've got a few more. Keep watching the overall score here. Look at Fisker. Fisker is also a good one. FSK, it's a financial services company. Nice 72 score as you see here, and it's done pretty good in 1 year as you see here. And we've got a few more. Uber is trying to turn around right now. It could be a good one to slowly buy here and go from there. And as you look through here, we got 1 year and 5 year performance. Keep a watch on these. Sometimes stocks that are not doing well at all, you got to be a little bit careful. That's why I like names like WAL here, which has done nicely in both 1 year and 5 year. And Twitter has done great in 5 year. Right now it's struggling in 1 year. And you could look at great names like Insight, which is turning around. And Asana has been a great one. Right now, overall score is not good, but founder and CEO is buying the stock left and right. And I also like Perigo, which is again a good one to slowly buy and go from there. So with that, we'll jump in and look at a few more details here. So what we'll do is we'll look at a few charts and see what's going on. So from a chart perspective, look, we got Twitter. Twitter after the last quarterly earnings, look, stock has been going down, down, down. We got a new CEO right now, and slowly stock is trying to turn around as you see here. So at this time, look, I'm a believer here at this time. On the balance, volume is also going higher. Lot of negative news about the company and the way Twitter functions, and a lot of misinformation. It's already baked into the stock. At this time, I think it's good to slowly buy, probably ahead of the earnings, and they can surprise in the earnings. And then we got Insight. Look, Insight has been trying to turn around. I like this. On the balance, volume is going higher. Stock is also trying to go higher. They got a lot of pipelines in their drug pipeline. That's why it's a good one to buy here. Stock is RSI is 58, tells you it's slowly trying to warm up here. It's a good one to buy. And then you got here Stitch Fix. It's a clobbered, as you can see here. This one can surprise during the earnings. Right now it's trying to slightly go higher, completely sold off, as you can see here. This one can surprise during the earnings and squeeze those shorts. And then you got Uber. Has been doing great slowly. Look, stock has been clobbered, trying to go higher slowly. I think this is a good one to buy heading into the earnings. And we got a few more, as you see here. We talked about Uber already. And then we got here Asana. Asana is completely sold off, as you can see here. Quarterly earnings is coming up. This can also surprise here. I think it's a good one to buy and hold. And then you got your Fisker. It's again a financial services company. Look, stock has been going higher. RSI is 59. I say probably wait for a little bit, let it cool off. And then you got WAL. WAL is again a great one here. Stock is sold off, trying to bounce back here. On the balance, volume is also going higher. You could buy this great stock here. Completely sold off, as you can see here. So with that, let's jump in here and look at INCY. INCY is one of my favorites here. It's got a great perfect score of 100 overall. Look, INCY, as you see here, they got, it's a biopharmaceutical company. It's into cancer and various types of drugs here. And they got nice pipeline. They have solid products and a nice pipeline. Stock price is around $75. Market cap is about $16. Look, stock has been clobbered in the past. Now it's trying to, it made a base here, and now it's trying to go higher. So it's a good one to look at this time here. I think this can do very well. And it's got a moderate buy rating from analysts, with 7 analysts saying buy and 3 saying hold. And as you see here, these guys also have nice application for lymphoma here with solid tumor program. I think it's a good one here, and it's one of the beaten down Cathy Wood type stock here. You could buy this and hold for a while. Long term, they're going to do very well. So with that, as you look through their portfolio here, they got multiple things going on. They got Zakafi here in US, and they got various drugs in the market. And as you see here, they've been expanding their revenue for a while now, like last 5 years. And they got various products on the pipeline. As you can see, 7 approved products, 12 approved indications, and they've been working on multiple pipeline candidates here. That's why they got solid growth in the future, and they're working on multiple things. They have great collaboration with multiple partners. So with that, let's jump in and look at the numbers here. Inside pharmaceutical, as you can see here, earnings per share is still negative. This company is by annual, as you can see here, yearly earnings per share. Right now it's negative, tells the company not making money right now. But look at the sales. Nice sales growth. I like this sales growth here. They're growing nicely, and shares outstanding is pretty constant. That's also good here. Quarterly revenue is in a good clip. I like that. And R&D investments is also pretty steady. They've been investing steadily. Sometimes these biopharma companies, they have some spikes in investment they have to do, but then they moderate over the time. This has been doing nicely. Steady R&D investments. I like it. From a net revenue perspective, picture is improving. The book of the business is improving. Look, it's been showing some positive quarterly net income. That's always good. That tells you books are improving here. So I like what I see here. That's why it's good to slowly buy along with the insiders. And next, let's look at one more stock here, Asana. Asana, one thing I noticed here is, look, we have a founder and CEO here, Mr. Dustin. Look what's been doing. He's been busy buying his own shares. He's been buying lot of shares, as you can see here. Look, he's been, 28th of January, 11 million worth shares. 27th of January, 23 million. He has been putting his money and buying the stock left and right. That's why I think it's worth buying along with this insider, even though right now stock is a little bit pricey. But look at the conviction from the CEO here. He's been putting his own money, buying the shares. I think that's why at these levels it's worth considering Asana. Even CEO and the founder is buying a lot of his own share. He knows what, the projection and the growth and the what's in the store for this company. That's why I think it's worth putting some money into Asana, by along with Mr. Dustin, who is the founder and CEO here. So with that, let's look at comparing the selected stocks here and see what we can make out here. As you can see here, we got selected stocks. Top of the list here, we got Twitter. As you can see, Twitter has got a nice overall score of 60, which is very respectable. Look, it's been down 52% from 52-week high. That tells you it's a good value right now, and it's a recommended buy rating from analysts here. And right now, net margin is negative. Company is not making money. That's one of the reasons Wall Street does not like it. And their revenue growth is very good. It's a growth company, as you can see here. And earnings per share perspective is negative. It's not making money. That's why Wall Street does not like it here. Look at the 5-year return. It's done great in 5 years. And in 1 year, it's struggling. That's why it's a good buying opportunity. And look, it's got nice financials. Altman Z score is 3.3. Tells you company is not going to go out of business here. And Piotrowski F score is 5. That tells you the book of the business is pretty solid here. I like the higher, the better. Lower is not so great. And I think they got solid rating from Morningstar here. All C, which is pretty good. And then we got INCY, one of my favorites here. Look, this one has got 100 out of 100 overall rating. That tells you they're doing very, very, very well. And they got nice buy rating from Wall Street analysts, as you can see here. And from a 5-year perspective, this company has been losing money for investors, as you see here. Right now, it's warming up. That's why it's got lot of headway or a room to grow as we go forward. Some of these biopharma companies, they will sleep for a while they discover the drugs, and then finally they take off. This is one of those candidates. All its work is paying off right now. They're doing very well. And from a financial perspective, they're doing great. Look, 10 from Altman Z score. Company's got a lot of money. And Piotrowski F score is 7, the highest in this list here. That tells you their accounts and the book of business is growing right now. That's why it's got highest rating, which is F here. That tells you off late the books are improving slowly but surely. And then you got here overall health score, great from Morningstar, A for financials, B for growth, and D for profitability, which is not bad at all. So next we got Stitch Fix here. Again, one of my favorites here. So Stitch Fix, as you see here, this has been doing pretty good, as you see here. And overall rating is 11. That tells you right now, overall rating perspective, it's not great compared to INCY or Twitter. As you see here, Piotrowski F score tells you situation is improving. That's why it's 6, which is above average. So that's why I like it here. They got a lot of money. No issue about the money here. Altman Z score is 5. And stock has been clobbered, as you can see here, in 1 year, negative 82%. So that's why at these levels it's completely sold off. You could slowly buy along with the insiders. And then we got here Uber. Uber has a CEO who's great, Mr. Dara. I think it's a strong buy, as you can see here. Nice overall score, 41. And look, stock has been clobbered in last 1 year, negative 24% performance. And they're not making money, net margin negative. That's why Wall Street does not like it. But Uber has been doing a lot of work in the background. I think that's why it's worth buying up here. It's got a nice growth grade from Morningstar, as you can see here. And then we got Asana. As you see here, Asana has been quietly doing nicely with founder and CEO buying their own share here. Overall score is less right now. I think right now it's beaten down. Look, they're not making money. Look, negative net margin here, negative 77%. That's why we got a low score here. But I think CEO and the founder is buying, company their own share, even though it's overvalued here by looking at price to sales ratio, which is 28, which is highest in this list here. It's still worth buying here along with the founder and CEO here. And then you got Fisker, as you see here. Fisker is also a good one to slowly buy. Look, Fisker is a buy rating from Morningstar here. Overall, nice grade, 72 here. It's a financial services company from KKR. Right now, RSI is 59. Tells you wait a little bit, let it cool off, and then you can buy. And then you got Wall here. Wall, as you can see, a strong buy rating, which is good. Stock has been sold off of late, 20% down from 52-week high. Overall score is 64, which is very good here. And as you see here, it's done great in 1 year as well as 5 year. Short term, right now it's struggling. That's why it's worth buying Wall and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.